Is now the time to be in safe haven assets? Joining me now is Doug Groh, portfolio manager over at Tocqueville Asset Management. Doug, welcome back to the show.
Thanks, Danielle. Good to be here.
So let's start with your portfolio allocation right now. Ray Dalio came out a few weeks ago saying now's the time to get defensive, not aggressive.
Right.
I know you generally tend to be defensive, but how do you see things right now?
Well, we feel pretty well positioned. We have a good exposure to physical gold, and that has served us really well this year, and I think it will continue to serve us well into the future. The rest of the portfolio, about 80% of the portfolio is in mining equities, and what we're seeing is good value. So I think there's a lot of opportunity out there, and I think as far as defensiveness goes, value has to be the number one proposition people look at.
So what are the asset classes that an investor should be overweighted in right now? Is it gold?
Well, we think gold, yes.
Yeah.
I mean, we're long gold, so we're speaking to our book, of course. But I think if you look at the gold space, you'll see a lot of value, and that should be more compelling for investors to recognize that, hey, the overall broader market has been looking at tech, and there's a little bit of a correction going on in tech, and growth has been popular, obviously, with a booming economy. But at some point, one has to recognize that a true investor sells high and buys low. Gold and gold equities are low. There's good value here. So there's a good opportunity, I think, to take some money off the table in the growth spectrum and put it in the gold space.
Last time we were on, you mentioned you like Pan American Silver and Detour Gold. Detour having a tough time these days.
Right.
But have you since switched your picks, or?
Well, we're still very long Detour and Pan American. We still like those companies. We think the outlook is very good for them. Pan American's operating from a position of strength. Detour is in a position of being reevaluated by the marketplace. And we think the outcome will ultimately be quite positive because there's a great asset there at Detour, and we think it'll come to light in due time.
If we look at the macro environment now and at the Fed and interest rates, pretty much baked into the cake, to the price right now, how hawkish do you think the Fed can get?
Oh, I think there's somewhat of a limit. We're at 3% 10 years right now. If we go up to 4%, that's going to tank out the economy, which actually would be probably quite good for gold. And I think, with the kind of world environment we're in, it wouldn't be a surprise, and the economy right now is booming across the country. It wouldn't be a surprise to see us approach the 4% level, which actually would be quite good for gold.
So you can have a booming economy and a strong gold price.
I think so. Well, ultimately, the booming economy gets stopped out by a higher interest rate environment, which would cause a recession, which should cause investors to come in to look for safe haven assets such as gold.
Just one more thought. Jack Ma saying that Trump's tariffs could have impacts and repercussions that could last 20 years out. How would that play out for gold?
Well, I guess it changes the world dynamic, right? And we've benefited over the last 25 years from globalization, and I think as a result of that, you've seen investors find other opportunities in the world. The world maybe becomes a little bit smaller in terms of opportunities, and I think gold benefits from that if investors are cut out from other parts of the market on a global basis.
Doug Groh, thanks so much for stopping by. Good thoughts from you today.
Thanks, Daniela.
And thank you for watching. We'll have much more for you from the Precious Metal Summit here in Beaver Creek. Stay tuned to Kitco.com.